Welcome to the Data in the AI Era podcast. This is Peter Finter, and in this series, I sit down with data leaders from the financial services industry to explore how they unlock the full potential of their data amidst the challenges and opportunities of the AI era. In this episode, we're going to explore how analytics can enhance trader intuition, where collaboration between quants, traders, and technologists still breaks down, and how new approaches, from natural language interfaces to time series similarity search, have the potential to change the game. Our guest today isn't interested in data for the sake of data. She's obsessed with what it can tell you and how fast it can help you act. It's my pleasure to introduce Kat Turley, the founder of ExeQution Analytics. She spent her whole career helping capital markets firms get more from their data, building platforms that turn complexity into clarity. Kat, thank you so much for joining us. And to kick things off, would you kindly introduce yourself to our listeners and maybe share a bit about what drives your work? What are you passionate about? And am I right in saying this is indeed your podcast debut?
It is. Thank you very much, Peter. I am very excited to be here. I have been waxing lyrical about data and its potential to transform trading for a really long time. So it's amazing to have an audience. But clarity and complexity, I like that. I'm going to have to borrow that phrase. As you said, I'm the founder of ExeQution Analytics, and we are a boutique analytics consultancy that was founded to help organizations turn data into value. So we work with organizations to really make the most of their investment into technology. There's a common refrain across the street that data is becoming increasingly expensive. So it's imperative that organizations are really making the most of it and transforming that data into analytics that can drive better decision making.
Yeah, very good insight. And the cost of data is going up. The volume of data is going up. It's about finding those needles, as some say, in the needle stack. It's becoming a lot harder. And as a result, people are investing increasingly in technology to go after it. And yet something you said to me in our prep call really stuck with me, which is that you're actually less focused on the tech stack itself and more on what it actually enables, which seems like a very good starting point for us. So I wonder if you might want to expand on that a little bit for our audience.
Okay. So I will quite often profess that I am a data geek. My background is in financial maths. And I started my career as a developer working with KX Technologies back in 2003 in New York. And I mean, that was when KDB Plus was released. So I've been working with the technology for, almost as long as it's been around. And one of the first projects that I worked on was migrating JP Morgan's analytic platform from their legacy code to KDB Plus into Q. And that was such an interesting project because it really exposed me to the breadth of use cases that people were using data for. And I was always so curious to understand more about what they were doing with the tools that we were building for them. But I had this idea that we were really just kind of scratching the surface of what the data contained and that there was more in there. So one fateful evening, I challenged the head of trading and, said that we weren't making the most of KDB Plus. We weren't truly realizing the potential that this technology offered us to understand markets. And that ended up being a very fateful conversation and really changed my career. A little while later, that head of trading came to me and offered me an opportunity to build a greenfield platform, the analytic platform of my dreams. And then once I built it, he promised to bring me into the business so that I could be the primary user of that and use that platform to answer questions. And so back in those days, I didn't talk anywhere near as much as I do now, but I was all ears. I'd go to a meeting and I was just desperate to understand what are the challenges that people face? What do they want to know? And how can I use data to provide answers to those challenges? And I'd sit there listening to the conversation. And as soon as something came up that I thought we could get a data-driven answer to, my whole face would light up and I'd be dying to get back to my desk and actually delve into the data we had access to and use those tools to come up with an answer. And I used to get teased a lot about it. But to me, technology was like, the choice of technology is so important, but it's really just a tool to expose answers and a tool that we can use to really better our understanding of the world around us. And in my case, in particular, markets and trading behavior.
I know you've said in the past that actually the answers is one part of the equation, but actually asking better questions is perhaps the more valuable aspect of how we can use technology, or why technology is available to us. It seems to me that has changed significantly. The ability for us to ask better questions. Most of us, having experience through LLMs these days, are getting used to the idea of prompt engineering. But it seems to me, Kat, that you've been involved in that for a couple of decades now, working with the KDB platform. What is it about that is about working in this environment that has helped you figure out ways to ask better questions?
I think having a flexibility of tools enables you to better understand. Like, if you think about you're going into an interview, and without having ever met the person you're interviewing, that you come up with a list of questions that you're going to ask them. And regardless of their answer or their behavior, you cannot deviate from that list. Well, it's not going to be a very compelling interview. So I like to think of data analysis in the same way. So you design tools that enable you to ask questions of the data, and depending on the results that you get from those questions, you decide what to do next, whether to pivot your questions to look at something from a different perspective, or whether to dig in deeper. So every question that you answer allows you to determine a hypothesis about kind of market behavior or trading behavior. And then you have the opportunity to either validate or disregard that hypothesis based on kind of further investigation. So I think iteration is a real key to developing our understanding of market behaviors, and developing kind of a better idea of where we can optimize, where we're doing well, and where those opportunities to improve exist.
I think that's very fair. And I think one thing that goes alongside of that for me is that you want to reduce the sort of steps between you and the data in order to get the answers. And that interactivity really hinges on an ability to use systems that are intuitive and aligned to the way that you might be able to pose or think about a question, so that the questions and answers are aligned. And that's, what goes through my mind here is that we're all getting used, as I just mentioned, to using LLMs to be able to interact with information. But perhaps what we're learning is the ability to ask good questions is the most important aspect of working in that way. And yet, at the same time, there's a debate about whether AI will in fact replace roles in our organizations. Is that really the key to productivity and future success? I think you have a pretty strong point of view about that. How do you see the role of AI and analytics going alongside of traders' own intuition or quants intuition about market behaviors and how to think about that?
I think there's two really interesting points to cover here. And the first is access to data, and how, like you said, prompt engineering and natural language is enabling us to democratize that access to data. So if we think of historically the platforms that I've been used to building, we're deciding what is important in advance, and providing people with tools. And then when it comes to this iterative nature of asking questions of the data, you needed to be a real expert in the API or an expert in the platform in order to be able to iterate through those questions. Where Gen AI is coming in, and where natural language layers on top of analytic platforms is doing, is enabling people who are not necessarily API experts to access that same data. So it's widening the audience that can ask questions. You no longer need to have technical expertise. You can use prompts, and those prompts can be translated into APIs that can go to your database and summarize the data for a trader and enable them to take advantage of the intuition that they feel without having to rely on an independent member of the team to really kind of dig deep into it. Because I think trader intuition is really important, and is something that is maybe not always catered for as well in organizations where there is a barrier between, say, trading teams and quant teams. So if you think of trading, there are basically three pillars to trading. There's the traders themselves, there's the quant team, and the tech team. And where we've positioned ExeQution Analytics is to sit in between that kind of triangle of those three pillars. Because we believe the data and analytics can be a unifying language to enable better collaboration between those three pillars. So on the one hand, you have quants who work across wide universes of names. They're concerned with probabilities and statistical significance, and that's how they develop models with predictive power. But traders, on the other hand, are looking at orders, individual orders, and most often the outliers of those distributions. So I've yet to meet a quant who will claim that their model is 100% effective in all situations. That's not how they're designed. So when the trader picks out, well, the model didn't work in this specific order, you can imagine the frustration that the quant feels, like, stop picking on my model. But on the other hand, the trader feels frustration because they feel like their inputs are not being valued, and that quants live in these ivory towers and they don't have to deal with real world situations. So this is where analytics and data can come in to provide context to the conversation and enable that conversation to move out of frustration and into something productive. So the data can tell us, yeah, you've identified an issue, and we run back tests over X years. And we acknowledge that that happens about 5% of the time, but we've no way of predicting it in advance.
Yeah.
And the value that the model offers in the 95% of the time outweighs the effort of predicting the 5%. So we're going to accept that as a cost. Or alternatively, the data says, yeah, you identified an issue where it doesn't work. We didn't think about that. We didn't think about this particular market microstructure characteristic of a stock. That means the model doesn't work for queuing stocks that have large volume on the bid or the offer. So let's define a criteria where we turn that model off so we can still get the benefit of the model, but we've listened to the trader, we've quantified the situation, and we've contextualized it to move forward and, use that context to decide where it makes sense for us to best devote our limited resources and our limited time so that we're getting the most productive end.
Yeah, I love the way you articulated that. That triangle makes so much sense. And it's so often about communication as well as collaboration. Yeah. It's using the same language. And, there's a lot of cross education required, isn't there? As a trader, understanding the inner workings of quants is not necessarily your top priority. And for quants who've never been traders, understanding their environment is equally challenging. It seems to me that there is a need for that, if you like, coordination across those three pillars. And as I think about that, I also think about the difference between, say, the front office, the middle office, and the back office, and the different priorities and the different roles that they each get to play. And I think that's another area where you have spent time and deeply experienced in this environment to see how difficult it is to align that. I'm wondering, where do you typically see that tension show up in that context? And how do you see firms successfully navigating it? What do the great ones do that you see not happening elsewhere, that you would suggest as a best practice in that respect?
I think some organizations that I've worked for historically have had very strict barriers between, say, front office teams and technology teams. I worked for one bank where, as the head of analytics, I wasn't allowed onto the trading floor with a chaperone. But my clients were sat on the trading floor. And what that did was that limited my ability to converse with them, to learn from them, to collaborate with them. And it really limited my understanding of what they did. And then conversely, I've worked for organizations where we've put, a front office team that is dedicated to trading and technology together and eliminated that barrier. And that helps people to understand more about use cases and what things are used for. And once you develop that understanding, you can collaborate to have a much more effective relationship and a much more effective solution. So it enables you. So if you think, like, traders ask for what they think is achievable, but they don't really understand the technological solution to deliver that. So sometimes they under ask for what they really want because they think what they really want is too hard. Or sometimes, but if you kind of work towards very defined specs and you don't have the flexibility to deviate from those specs, it can be very inefficient, and you can end up with a solution that is suboptimal because the tech team build what they think is needed rather than what's actually needed. So having the ability to go, okay, you've asked me for A, that's going to take me 6 months, but I can deliver B in a month, and it's probably going to get you 90% of the time. Is that good enough? Or do you need A and do you need to wait the next 5 months? Like, rather than individual teams making that assumption, bringing everybody together so that they can communicate quite openly and have a better understanding of, the difficulties involved to deliver to a use case, but also what that use case will be used for, I think really helps organizations become more efficient and develop data and analytic products that are really, really more useful.
Yeah, absolutely. And who do you think has the primary responsibility to drive that trade-off conversation? Where do you see that happening to best effect? Who typically takes the lead? Is it on the quant? Is it on the tech team? Where does that originate to get those kind of outcomes aligned across the team in your experience?
I think it has to be a collaborative effort.
Mm.
I think the trading team need to be involved because they're ultimately the business users and they're funding the budget for these organizations. But both of the other pillars need to step up and take responsibility and ownership for the final solution and have a combined understanding of what that final solution will look like and how to deliver it in order to have the most effective results.
Yeah. So much of what we're talking about is about shared language and shared access to information. And on that, along the same lines, we recognize here that data is itself elusive. Getting to the right data and making it available in the right way is proving to be one of the biggest challenges. When we talk to quants, they typically tell us they spend a tremendous amount of their time just trying to get the relevant data into the right format so that they can then actually apply their intuition and skills to that data. And I wonder, Kat, in your many years of working with these teams, you've seen all kinds of challenges that teams have had to overcome. And I'm wondering how you are seeing the evolution of technology, particularly in the area of natural language tools, changing that situation for the better, or indeed for the worse. Are there some hidden downsides that people might not anticipate when they start to pursue a new approach here? How is that working from your point of view?
I think a lot of organizations have traditionally invested a lot of money in data capture and data storage and obtaining data, but not necessarily the same amount of resources or focus on data access and data usage and that turning data into value. And that's exactly the reason why I founded ExeQution, was to fill what I perceived as a gap in the market. And I think the way that you access data in order to get true understanding needs to be quite structured so that you can account for the peculiarities or venue specific microstructures, holidays, special date behavior, tick sizes, lot sizes, all of that in a very structured platform so your users don't have to deal with it, so
Yeah.
that they can
Yeah.
focus on how they use the data. But equivalently, it needs to be very flexible so that people can use the data in the ways that make most sense to them, depending on what they're trying to do. If your focus is building a model that's going to forecast volatility, you're going to look at that in a specific way, versus if your focus is on understanding your execution costs and your TCA and doing a broker evaluation.
Right.
The
Right.
decision, and it can come down to which trades do I include and which trades do I exclude. You'll make different decisions for different use cases. So I think having a very structured access is important, but also with that level of flexibility. But if you want to then get to that next level, one phrase I like to use is, I said that a good analytics platform should operate as both a microscope and a telescope. So you have the ability to go in deep, to delve deep into the data at a really granular level and understand on this microstructure level what's happening. But you can also use it as a telescope, sit back, look at the market as a whole, observe trends, and have an understanding of how that granular behavior impacts overall market dynamics. And having that ability to switch between those two perspectives, I think, is what really leads to an improved understanding of data and market behavior.
I think that also, I think that's a very good point. And, that different perspectives requires a different way to present data and to visualize data. And some of the tooling associated with that historically has been very challenging to work with, requiring a lot of technical expertise to be able to create different views of data. Are you seeing that changing? And in what ways is that manifesting with your clients?
Yes, I think like technology's obviously evolved so much in the 20 years that I've been in this business,
Mm.
and we now expect more of our solutions. And I think with the development of like in recent years of AI and where that's bringing us, it's allowing us to move beyond these preconceived ideas of what's important. So, say
Mm.
traditionally we would design dashboards that traders would use, and they would look at predefined metrics that we expect to be interesting. And where
Mm.
we're moving to now is more API driven trading, where traders can actually demand the questions that they want and kind of open up the analytics platform to actually understand. So instead of having to rely on what we thought was going to be important 6 months ago when we spec'd out that project, we can have a more dynamic view of market behavior and say, okay, I'm trading this stock and it's just gone into a trading halt. Find me 5 other instances where stocks in this sector went into a trading halt. What happened? What happened to stocks that trade alongside it? What happened to all of these others? And you can kind of decide the questions in like on the fly
Right.
to get access to that data. I think that's where there's just so much value. And traditionally, it's been hiding in the data, and it's been a lot more difficult to access unless you had proper technical tools. And now we're opening up that access to people who don't necessarily can't program in Q or Python or other languages, but have the
Right.
ability to use APIs to actually pull that data out in a more dynamic way. And I think that's really exciting.
I think it is. I think it's actually, in a sense, rebalancing the way that the model works, because in some sense, we put so much emphasis on the quants to do the thinking and for the traders to do the executing. And we're really
Yeah.
empowering the traders actually in this new model to be able to
Yeah.
interact with the data and to apply it into their direct experience in a whole new way, not to detract from what the quants are doing, because there is an interplay between those two. And I love that.
Absolutely.
I work, as a professional marketer. My colleagues in sales, perhaps see the marketing function in the same way that traders might see the quants. There's somebody that looks across the broader picture where the salesperson is focused on their specific accounts and what's happening in their specific world. Marketers are required to think about, multiple segments of the market and multiple sectors.
Yeah.
And so they bring a different perspective. Neither is better than the other, but the two working together can be incredibly powerful. And I think we're seeing this
Exactly.
evolution now where traders are being able to use more of the tooling because it requires less of a technical demand on them, but they can apply their intuition to ask better questions, as we discussed earlier on, which then plays back into the quant world and drives the quants to build better and more refined models to support those new insights. And that back and forth between these two environments, I think, is incredibly exciting, all contingent, of course, on the use of technology to underpin it. And that leads me to my next question, which is really around how we are seeing technology impinging on the role of the human. We are seeing AI manifesting, as we've touched on already, in many different ways. And it starts to lead to the question around, what do we trust? How can we trust what we're getting now from these new tools that are unfamiliar to us, that appear to operate like black boxes in many respects? And here we are in a highly regulated, but also highly competitive environment. We want to leverage these tools and technologies, but we got to deal with issues around trust, around hallucinations, around explainability and a risk. So how do you handle that? How do we guide our teams to be able to take advantage of these changes without exposing themselves to risk, and an inability to ultimately support the decisions that they are making?
It's so interesting, isn't it? I find it fascinating, this evolution. So like we're all so used to technology, but we're used to relying on it 100% and not having to question it. You use a calculator and you will never question the answer that that calculator gives you. You absolutely have 100% trust that it is 100% accurate. And now we don't know how to deal with the situation when a machine is giving us an answer that is potentially not 100% accurate. And it's like with these hallucinations that we're getting, it can feel sometimes, quite brazen that the AI is offering you with absolute confidence this answer that is completely wrong. And it will never say, I don't know. It'll just make something up. So how do we deal
Just
with
like
that?
humans, in fact.
Well, that's the key, right? I think the answer and how we deal with it is we treat it more like a human. So we demand
Yeah.
transparency. We demand to understand the steps that it got to get to that answer. And we actually
Mm.
make attempts to verify it and validate it. And we don't trust it with 100% accuracy. And if we do that, I think it actually offers us an opportunity to better our understanding. Because if we're forced to ask questions about how it came to that outcome or why it got that answer, I think it enables us to better understand the answer that it's offering us in the first place. And I think if you asked a human a question and they gave you an answer that was dubious, you would question it. So why don't we do the same thing of models?
Well said indeed. I mean, I really do believe that if we think about this word trust and think about the
Yeah.
way that we build trust as humans, yes, we generally start assuming positive intent. We assume that the person is not deliberately trying to mislead us, but equally we're keeping our ears wide open and our senses on a max override to try and to discern and detect. And over time, we build confidence, we build trust. We've
Yeah.
experienced some stuff together and we come through it in such a way that we say, yeah, this person is reliable. They generally don't give me a bum steer. You know, they generally do act as if my interests matter. I feel as if we are building relationships with machines, which sounds a little bit odd, but in
I know.
reality, isn't that how it's going? You know,
It's
I was
very
inspired by that
sci-fi, but it's
movie.
what's happening.
It is happening, and you know there are many examples in science fiction which are becoming close to reality. And the movie
Yeah.
Her always comes to my mind at this point. Absolutely brilliantly executed way of explaining how we can easily start to treat machines like humans, whether it's appropriate or not. But as you pointed out, some of the guards the safeguards that we naturally put in place are useful to us and should be applied when it comes to models and the recommendations that we're using to inform our decisions. I said it in a previous forum, but I think it's also worth noting that one of the key values that AI can provide is to enhance our ability to make predictions about the future. And we're talking about models, that's largely what they're about. And what it generally doesn't do is to enhance our judgment. So we should recognize that that is the human characteristic that we are going to need to retain and
Mm.
continue to develop in order to build better outcomes. But here's a contrarian point of view that I heard from another of our podcast guests, Mark Palmer, who pointed out that hallucinations, if they're managed well, could actually help us explore new ideas, which extends the idea of
Mm.
machines as tools, and indeed turning them not just from tools, but into even collaborators. Is that something that you see happening? Are you excited about that possibility? What experience have you had of that so far?
Yeah, I think it definitely offers us an opportunity to be more creative because machines can offer alternative solutions that we as humans wouldn't necessarily think of immediately. And I
Mm.
think one of the like kind of well documented costs of expertise is that you fall into tried and trusted processes. So you have a path to a solution, you know it works, so you tend to follow that path, and you don't tend to think outside the box or deviate from that path. But if you're following the same path over and over again, you're going to lead to the same outcome. And I think embracing some of the creativity from these hallucinations and some of the patterns that machines see that we don't necessarily see or that we discount or we think, well, that can't possibly be the answer. I know the relationship between these data points because I've been working in this space for 20 years. I think it really can open our minds to creativity and to exploring other areas. And I think alongside, one of the benefits that we're getting from AI is this ability to iterate really quickly.
Yeah.
And so if we can iterate really quickly, then we have the time to kind of explore, cast a wider net and explore other ideas. So yeah, I think that
Yeah,
can be quite exciting.
I love that articulation because, you know, one of the things that we hear most from our customers is how much they value the ability to try more things, try out new ideas
Mm.
at scale. When, you know, if we can improve performance so that we can perhaps spend, you know, a tenth of the resources to explore an idea, we can literally cover 10 times as many ideas in the same amount of time with the same
Yeah.
resources that we used to. And I think that that's causing us to be able to see things that we couldn't otherwise possibly have seen. We simply couldn't have spent the time getting to it. And so that ability to refine is all about our ability to rapidly iterate, exactly as you point out. And we use the tagline survival of the fastest, which is really about saying it's how fast you can adapt to new conditions, new information, new environments. That's really the absolute key. And one of the tools that we found becoming increasingly useful that has come from the world of generative AI, but is now being applied to structured data, is what we call time similarity or time series similarity search, which is, we think, a smarter way to model. But what kinds of insight are we actually asking systems to produce is at the heart of this issue. And I'm wondering, when we are thinking about, that, how do new tools, new techniques like time series similarity search help in that respect?
I love this idea of survival of the fastest. And obviously, I've been a fan of your technology for my whole career. But when I try to explain to people why speed matters, and I use this idea of iteration, and I'd say you have an idea, you're a quant and you have an idea, and you test that idea in a small data set, and then you need to really test it on a much larger data set to prove it. So if you kick off your back testing and that takes 3 weeks, and you come back to it 3 weeks later and you see the result and you say, oh yeah, that's not bad, I'll put that into production. But if you can operate much faster, if you can kick off that back testing and get a result overnight, so you leave it to run for 16 hours, you come in the next morning, you look at it and you go, oh yeah, that's not bad, but I wonder if I did this, would it be better? And so that's what speed is giving us. It's this ability to target a higher level of excellence and not accept not bad, but actually iterate until we get to something that we're really happy with. But we've been playing with time series similarity search a little bit, and we've seen some really interesting use cases for it in the quant modeling space. And if you think about the way, so there's kind of two areas in which I think it's really interesting. And the first is if you think about the way quants develop predictive models, they usually decide on a universe that is representative of what they want to trade. So it might be the top 500 names in terms of liquidity across these exchanges, and then you use that as the basis to understand patterns, and then you apply those patterns that you understand to your predictive model. So what we've been using time series similarity search instead is to say, okay, well, here is a vector of characteristics of a specific stock. Go find me the 200 stocks in this wide universe that are the nearest neighbors to this vector of characteristics, and use them as the basis for which I'm going to model, and then apply my predictive model to that to determine what the actual pattern is and how much can that improve the predictive power of my model versus using this kind of generic base set, which could have a much wider range of characteristics. So we've seen some really promising results in that. I think that's really interesting. And then the second area, which I think is really interesting, is in like the surveillance and compliance aspect of trading. So if you think of typically how surveillance worked, you have set rules, and your rule would be if I'm more than X% of the market, or if the price moves more than Y, then we're going to investigate. So it's very black and white, and it's very easy to manipulate black and white. So I think what time series similarity search is, it allows us to move into the gray and say, here is an example, find other examples that have similar characteristics to this. And then we can use them to define either appropriate behavior or inappropriate behavior, and allows us to kind of understand. It's more about nuance, right? Because that's where the real value in data is if you can capture the nuance rather than this black and white. So yeah, there's so much that we can explore here. I'm really excited about the potential.
I am too. And one of the things that that we talk about is the known unknowns versus the unknown unknowns. And I used the phrase earlier, finding the needle in the needle stack, because in many respects, at first glance, and even with some reasonable amount of analysis, we might not see a pattern that really does exist, because we're not necessarily approaching it from the right angle. And sometimes you have to change your lens, you have to change your perspective. You talked about the microscope to the telescope. I think that's such a great analogy to use, because it requires us to think differently about the data set that we're working with, and to enter it from a different angle can often lead us to different outcomes, or outcomes that we did not anticipate. And when we're in the business of finding an edge, which is the business that we're in capital markets, I think we want to use all the tools that we can possibly apply to find the thing that others are not going to find. because they're not asking the right question or they're not approaching the question in the right way. And I'm excited about this because it's an emerging area where there are new use cases that are yet to be determined, yet to be
Yeah.
found. And that's one of the most exciting things about the space that we're in. As you pointed out, you've been working in this space for over 20 years now, and it feels like there's more freshness about what's going on today than there has been in many, many years. And new possibilities are emerging, which is challenging for all of us, but creates a chance for us to do something that's really remarkable. And I think, Kat, it's been such a pleasure chatting with you. But as we bring our time together towards an end, I wonder if you might share with us one key takeaway that you would like the leaders who are listening to this podcast to take away from what we've discussed. What would that be for you?
One, that's hard. I talk a lot. I have a lot of opinions in this space. It's difficult to narrow it down. One takeaway. I think do not underestimate the value that is hiding in your data. There is so much value in there. And if you can invest in building tools and processes to extract that value, it can really help areas of your business in a way that you can't quite comprehend. So it can improve an understanding of markets, an understanding of your trading, identify where you can improve your performance or lower your costs, improve, like if you're on the sell side and you want to improve your share of the wallet, or if you're on the buy side and you want to increase your assets under management, like having an understanding of the space that you operate and the understanding that data can bring to that space. I think that is, that's probably my one thing.
That's beautifully said. We talk about unlocking the full value of your data. And that is really the key, isn't it? The reality is you've got access to information. Everyone has access to information that is unique to them. Yes, of course, we have access to public market data, but the reality is it's the application of our proprietary data and the integration of that with that publicly available data that gives us the edge, gives us the ability to drive different outcomes for our business. And finding new ways to unlock data is really what we at KX are all about. Well, Kat, thank you so much for spending the time with us today. It's been an absolute pleasure chatting with you. How could people find out more about ExeQution Analytics?
I guess look me up on LinkedIn. My name's Kat Turley. Or check out our website. Please get in touch. As you can tell, this is something I'm super passionate about and love to talk about, and would love to talk about ways in which people can make it work for them.
Fantastic. So please reach out to Kat for more and join her on LinkedIn or at her ExeQution Analytics website. If you want to find out more about us at KX, please check us out at kx.com with a high-performance analytical database for the AI era. And as we've been chatting today, we have been talking to a lot of interesting guests around different aspects of that. So please follow through. If you have any questions, or you'd like to rate any topics for us to cover in future podcasts, then please do email us at podcast@kx.com. Thank you again for listening. We'll see you next time.